Have you ever noticed something strange? When people invest their first $1,000, they're excited. When they invest their first $10,000, they're a bit nervous. But when someone is about to invest $100,000, that's when the fear hits them like a truck. Because at that level, one wrong move isn't just a small mistake, it's a mistake you feel for years. So if you're sitting on 100 grand, or you're almost there, and your finger is hovering over the buy button, this is for you. Here are 7 rules wealthy people follow before putting a six-figure amount into the market. Break them, and you risk losing years of progress. Follow them, and you give your future wealth a fighting chance. Rule number 1. Do not invest the entire 100K at once. Most first-time investors think, I saved it, so I should invest it immediately. That's wrong. When you invest a large amount in one go, you expose yourself to terrible timing. The market could drop 10% the next week, and you've lost $10,000 before you even start. Instead, break your 100K into chunks. Invest over weeks or even months, not in one emotional moment. It's not about being slow, it's about being smart. Rule number 2. Make sure your emergency fund is already done. Six-figure investing without an emergency fund is like driving a Ferrari without insurance. If something goes wrong in your life, a medical bill, a job loss, a broken car, you don't want to be forced to sell your investments at a loss. Before that 100K goes anywhere, you should already have 3 to 6 months of expenses saved, no high-interest debt, and a stable cash cushion. This protects your long-term wealth from short-term chaos. Rule number 3. Have a clear investment plan before touching a dollar. Most people invest 100K by looking at whatever is trending, whatever their friend suggests, whatever pops up on social media. Wealthy people do the exact opposite. They decide their plan before the money moves. For example, 70% in index funds, 20% in bonds or real estate ETFs, and 10% in higher risk opportunities. When you invest with a plan, emotions stop controlling your decisions. Rule number 4. Avoid individual stocks unless you understand them deeply. At lower amounts, $500 or $1,000, individual stocks are a fun way to learn. But at $100,000, single stocks can destroy you. A company can drop 40% in 1 year. Even safe companies can collapse. If you invest your six-figure savings based on hype, you're gambling, not investing. If you insist on picking stocks, keep it under 10% of your portfolio. Treat it like seasoning, not the whole meal. Rule number 5. Understand your risk tolerance before you hit buy. Everyone thinks they're brave until the market actually drops. Here's a tough question. If your $100,000 dropped to $75,000 next month, would you panic? Would you sell? Would you freeze? You need to know your emotional reality, not your fantasy. If you can't stomach big drops, choose a safer mix of assets. Know yourself before you invest, not after. Rule number 6. Taxes matter now more than ever. When you invest a small amount, taxes don't feel that painful. But when you're investing $100,000, taxes become the silent thief of wealth. Before investing, check. Are you using tax-advantaged accounts? Are you minimizing capital gains? Wealthy people don't just focus on returns, they focus on after-tax returns. That's how they stay wealthy. And finally, rule number 7, your first 100K is not for flexing, it's for building. When people finally save up that much, many get tempted by a new car, a nicer apartment, a vacation to celebrate. But the wealthy understand something powerful. Your first $100,000 shouldn't change your lifestyle, it should change your future. This is the money that builds true financial independence. It's not money for showing off, it's money for freeing yourself. When you follow these 7 rules, your $100,000 stops being just savings and starts becoming a foundation, something solid, something that will grow for decades. Because the truth is simple. Anyone can invest a small amount, but investing a six-figure amount wisely, that's what separates the wealthy from everyone else.